What's going on, folks? Happy Tuesday. A little bit later than I anticipated, but nevertheless, I am here. Pretty big day for Ethereum altogether. Seeing some moves in the market with this or proposed ETF thing with ARK and 21 shares, where they're making moves to make some of their assets into an ETF using Ethereum as far as a network. So it's obviously causing a huge rally in the market right now. We have a couple ideas that got invalidated earlier today around this 1620 benchmark, especially from this move down. But we're going to be diving into it a little bit more. We picked up an anti-butterfly on the way down to this area here, but as you can see, like this huge 3% pump kind of already filled all of this, if you will. So some folks may want to try to get back into something like this, but we'll see. Let's go live. How do I get to this video live? Here we go. Yeah, that's fine. I can't do it from there. There we go. Load this up. Wonder how I can see that from here. Oh my god, a ton of spelling errors on that. Jesus. There we go. So just waiting for some people to load, hop on into the stream. They don't give you the dashboard straight from here. Oh, here we go. Yeah, that's what I was looking for. Here we go. Sorry about that, guys. I was looking for the control room on YouTube Live. There we go. So, right, we got some big news today from ARK Investments and 21 shares. Two big, huge asset managers. And if you guys know anything or at least watch the news at all, ARK Investments, pretty large company. Kathy Wood, one of the founders of it, pretty bullish on Bitcoin as well as Ethereum. So, some people may be getting behind that because obviously that's institutional money. Those are whales. So we may be seeing some of that today. I'll be frank, the whole day, as far as like just moving sideways, and then we had this move down. I was like, man, this just looks like it's going down. And then we had a body. I think I was working a 90 today. Yeah, I was working a 90. No, forgive me. I was working a 30. And at the time, this big old long tail, I'm going to call this a hangman, if you will, um, was obviously a body at the time. But then we just had that sharp pull up, kind of danced around here, and you guys see what happened. Pushed into a tight resistance area, 1663. This is measured from, show you guys here. You see the measure points. Up here, right? So from when this waterfall came down to this 1490 area, that's where this fib is measured out from. And I'm only measuring the 0.5. So, 50% retracement back up, then we reclaim that, then it's a bullish move based on this structure from coming down. So it's a resistance area, and you can also see that right here, push up and out of it, then a hard retrace right back into it, and then sideways movement. We had something very similar with that today. And what would cause this is what I just mentioned. A lot of people getting bullish behind the whole ETF. It would be the first in the United States, so a lot of people are feeling that right now. So retail could also be piling on as well too. Still a dangerous area here, like if you're taking shorts or taking longs. Clearly, you can see what happened. A 3% move out of nowhere. We could see the opposite happen here. It looked like a pennant was going to form here. And this could still just be the retest, unless it wants to move up higher. But in order for this to have like another swing point for us to find a different pattern, like this is going to be a swing point down the road. So is this. But we're going to need something a little bit higher here. Somewhere in this region. Even up here, 1777. I'm not saying that's where we're going right now in this move. If we're looking for like reversal points, something with substance in it on a higher time frame, I'll go to a mid, say like a 4 hour or so. Right? We've talked about this imbalance stuff before in the past, so even this move down here, and then just this wick, because right now it's just a liquidity grab. That's the game that they're running right now. It's a liquidity grab. This isn't filled. So technically this area, could have liquidity in here. But shorting here just makes it equally as dangerous because, like I said, you can see what can happen here. 1663, good area to enter if you decide to enter. What up, Minga? Just saw the chat. What's going on, brother? This is proving to be some type of demand zone. From 620 down to here, it's a good amount of liquidity as well too. I closed my long earlier just based on some of these moves that we had coming down. And if you're working a 4 hour, we saw this come down and then obviously just shoot right back up. So, and now we're right back to the same range where we're at. So when I see moves like that, it could also be one of those sell the news. You have a fake pump that comes into the market and then retraces all the way back down. If this next candle that opens, it runs into the same scenario where we're stuck at the 1638. This is just going to be a shakeout, right? For anyone that was shorting this area, they wanted to push them out, run those stops. No, everyone's trying to catch this same type of wick or this same type of price action, or at least anticipating that, and then it just goes the other way. So that's why this is just dangerous area. If you caught this 1663, congrats. Just hold tight. I think this area, if you set your stop loss somewhere a little bit above this, you would still be in profit, but that was something that I would be looking into. I caught it a little bit higher, right at 59. And then I've been adding back to my short in this area here on these tops. You guys run into any questions or anything you want me to run over when it comes to this, just let me know. But that's really where we're getting the whole rally from, just out of nowhere. Like sideways moving, there's just one leg up and then we don't hold that. That's essentially where we're getting it from. Now the narrative changes if we move up and we hold above this 1639 level, 38, 39. Like if we can get a body above it, because we haven't had a body above it for a minute now, or at least that was the last time. So back on the 31st. So going on 7 days, these 7 trading day sessions. So it's been a while. But if we get a body above this 1638, like I said, that changes the narrative. And then the next body, if this were to turn into a body above 1663, then there really shouldn't be a reason why we can't move out of here, out of this downtrend right here. It may seem something very similar to what we just saw today. We catch a wick out of here and then it retraces all the way back down. So in the event that we do break out of this trend right here, I would wait for the next candle to see where that goes. Right? Let's say it pumps up, holds somewhere over here. The next candle opens. It's probably better if I do it like this. Like it comes up. Next candle opens, comes down a little bit, but then just keeps going up. I still wouldn't want you to, or at least myself, I wouldn't be entering at that time simply because it could come here and then retrace all the way back down. So I would probably have a better luck of looking for, or a better opportunity looking for a entry, either retesting this area of resistance, 1677. So if we can flip it, because it was support at one point, and then it's, if it comes and tests it, then it's trying to flip it. But if it breaks out and wants to retest it, it has to retest it to confirm that it's support. I would look to long that. Maybe even set your limit orders slightly lower, like the 1665 block and up to 1677. And then this is assuming that you opened up like a hedge somewhere in this area. It could stretch up a little bit higher, come up to here, to this fib. But like a Godwick would literally put us somewhere back in the 1800s. Like just blow right past the 1700s, that would be your Godwick. And I only see that happening if this continues. Like if this just has a nice doom fall. Right? And just kind of chill out there. And then maybe we have it to here. And then another retracement back down. that would cause this to move. I'm still just conflicted as to how this reached basically for the year, right? I think it's been longer than that. Because I mean that's a new high for this year. Let's double check that. Yeah, previous high. Good gosh, look at that retracement too. Something noticeable too. Um, the brush is still on. I'm like, why isn't this grabbing this? There we go. 2022. Here we are for the year. So I mean, that's a high for the year. What does that look like measured out? Last year to compare to this year. Huh. 105.917. And when did this reach? 105.883. That wasn't today, was that? That was here. Okay, that was here in this area. Just wanted to get an idea as far as when's the last time we were this high up. Like, where does that come from? There we go. So this time frame, so January of this year. What was crypto doing it in January of this year? Last time we were that high. It pumped too. Yeah, so the whole month of January basically took us out of this. It was a change of character. And that relatively same time frame, I'm gonna assume it's this right over here. That's when it started breaking down. So while crypto was pumping in the month of January, Dixie reached its high, 105 and some change, and it's been breaking down and it's trying to reach that same high. There's a lot of imbalance on Dixie right here, right? Because you look for where the major high was. That's an extreme high, right? And then the next couple candles that you'll see right after it, here's your imbalance. You have a gap down, and this is on a daily, so you have a significant gap down right here. Your bearish pullback, right? And there's resistance, so it's actually probably important for us to mark off. Yeah, we're coming just shy of that. So who knows? It could have a turnaround. Like if you go into a lower time frame and you start looking at it from a lower time frame, right? Maybe it wants to flag out here and tap into this OB. Or become a falling wedge. One of the two. Like if it retraces hard enough. But this is important to see right here. These double tops right there. You see that's making a So it's really got to, honestly, it has to hold that. If you can hold that and make another move up, then same story. I'm looking for the dump on our side. The dump on our side. And that would put us right into that OB. It's relatively where we came from because we're looking on a daily, right? Right in this imbalance right in here. You can see the imbalance, right? Because you have a breakdown, then you have a gap down, and then there's just more selling pressure. And the moment we move back up, we get rejected right here. So this is what makes this a decent OB, if you will, or at least a strong one. If it punches right through, then it obviously invalidates it, and the momentum's stronger than what we're anticipating. But according to history, last time we were here, this is what occurred in the January timeframe when we started peaking out. So this could flex into this area, and then we see a similar breakdown. Maybe not reaching all the way up to here. If it does, I wouldn't be shocked because that's a 618, and it would be a double top on a higher time frame, like a daily, between here and here. And during that time frame, I think it's important to know what crypto was doing at that time. That's probably gonna hard to see. Let's maybe go like 16-hour. Probably best case scenario. I don't think I can get back a year. Actually, maybe. Yeah, I can. Let's do it like that. So as that thing peaked in January, that's literally when the this is a scallop moving into, right, because you have a descend and then this little Nike check looking move. That's your scallop. Then once you get your change of character, you have a vertical run up, and then I think this retraces like 75%. This is essentially a form of like back testing theories and ideas, so you can have a better idea as far as how to plan for the future. So that vertical run up just retraced to a 618 and then made its next move on up. So it'd be nice to see that it dumped on March. So we started pumping again in February, and then led into March. We started dumping. So somebody was lying at that time because they both dumped. And then the same month of March, towards the 14th, 15th, we started pumping. And Dixie, yep, there you go. Okay, that makes sense. So the beginning of March, we dumped and Dixie pumped. Middle of March, Dixie started to dump. And then that's when that pullback took us all the way up to 2100s. Right. So that's the TA side of it as far as like what happens in these areas. When's the last time we were here? This is going to mess me up later. Right. Just kind of zooming out on higher time frames and then going into a lower time frame to see what those order blocks look like. So in the event that this bad boy wants to surge up to here, I should anticipate obviously some type of dump, but when it starts to come back down, we've seen that ETH has pumped, right? Within a day, if not a day before or a day after, it's been within that range. In this scenario today, or at least the last couple days, Dixie's been on an absolute tear, and ETH, or at least for the most part, most crypto markets have been holding themselves together. They're not dumping as what we would anticipate for a big of a rise that we're seeing in Dixie, a big of a pump that we're seeing. Some of these legs, right? 1, 2, small little leg, 3, 4. Right? Like these are big enough moves because it's always setting a new high every time it has a move up and it has lower lows. We're not seeing that same type of momentum in the crypto markets. We've actually just kind of gone sideways. While all this has gone on, we've gone sideways. That's why I mentioned that we either have a delayed pump or a delayed dump. Should be a delayed dump in the crypto markets. But then we got that fundamental news today, pumped, and then we came right back down to here. And I think that's where the TA is stepping in versus fundamentals. It's we should be retracing lower in order for us to go higher based on where this is at. Yeah, like in this area, I would, if you're, I took some out of my short in this area, like when we came back down to here and we tested this line because we started making equal lows, and I was like, I don't know what that's about, right? I didn't know if that we were going to build support there, if we're going to keep going. We have a strong sell candle followed by another sell candle that looks like an inverted hammer, but it's not. It's really nothing. It's just the appearance that it has. But someone is stepping in these areas. I think that's 1627. Yeah, 1627.25. I believe if it claimed, like, just thinking smaller, or at least uh, more minute in the sense of what levels do we need to take to kind of give us conviction. I think it's this area right here, the 1639, 1638 area. Like we get a nice body over there, we can hold it on the next following candle, kind of like this, but not this as the next candle, strong sell candle. We may be able to make that move up to here. This is going to be a really crucial area, right? We claim 1663, but like flipping this back to 1677, we need to keep this same momentum. Speaking of momentum, I don't know what that looks like right now. Yeah, that looks like a whipsaw. That's even on a daily time frame. I mean, if you shrink it, it looks like a doji, but I think that body's too big to be a doji. Could be wrong. Yeah, I mean, it's like $2 off, which doesn't sound like a lot, but in order for it to be a doji, the body needs to be like pennies different from an open to a close. I mean, we still have like 2 hours left before the daily closes. But if you're operating off of it being a doji, which is indecision, this wouldn't be that. This would either be a whipsaw, or the other known as the other pattern is known as a rick saw. So it looks very similar to that, to a doji, but it has a slightly bigger body. And contingent on the momentum that created that, it's usually a continuation, not a reversal. So momentum that created this was a downtrend. So if I was basing off of this particular candle on a daily candle, a higher time frame, that could be a continuation to the downside. Like we see more spikes, we touch into this area. It's really a matter. I don't know how many fundamental traders we have within our group. I wouldn't claim myself to be one. I certainly don't teach on it in that sense, but it's a matter of, do fundamentals outweigh the technicals right now? I'm just seeing the chat. What's going on, Mario? Feel free to share your ideas, guys. If you have some thoughts, if you want to explore it a little bit more, dive into it. I think I mentioned earlier we picked up an anti-butterfly right over here, like just from these moves. And technically it's still valid because we could have a retracement back down to 1620, excuse me, 1615, 1612 area, and it would still make this pattern valid. From my experience, right? Because if I'm looking at a 15-minute, right, like there's imbalance right over here. You can see by this candle. We have a strong bullish move, long wick, so that's obviously liquidity. So somebody being institutional money started piling on with their selling pressure just to push the price right back down. Right? And they did the same thing right down. Actually, they did it right over here. Nope, that's a lie. They did it right over here. Look at that. Like from open, just pushed. Small retracement. This is retail. I was part of that batch. I put in a small short here at 1621 to add to my my existing short, and then boom. Right. So these moves 1, 2, 3 institution. Now they push the price right back down. Folks think they're going to get the same thing. They keep pushing, and then right in here, right in between here, you have retail because you can see this imbalance. Right in between these candles, which subsequently lines up with the 1638 that's been a nightmare, I think, like I said, since the 31st of August. So what they're essentially doing is, this looks like a bearish retest, in my opinion. If I didn't know anything about the news and I wasn't paying attention to like ETFs or anything like that, this was a fake out, and then we're going to have an order block right over here. Bulls would have to flip this zone, take liquidity here, and just keep running. Right? Like punch through like it did before, but then just keep going and then hold. Like 1663 and then hold. Then your rally is going to start. It probably won't come back down. It won't come back and pick up any more orders. You could also call this a throwback, right? Move up and it just threw it all the way back down to retrace. I mean, how big was the move? Like, damn near 80% of the move. Wrong one. Yeah. 88% of the move from move up. And you have shade bottoms here again, right, where they're making equal lows. If you're sidelined, I mean, I don't blame you. I don't. It's not clear direction as to where it wants to go. The appearance makes it look like it wants to be bullish because we're having strong recovery, but we're also getting equally strong rejection. This was a strong move, and we had an equally strong rejection right back down. So it's difficult to make that decision saying, yeah, I'm bullish when price action's right here. We make another trip down here into what could be the demand zone where we've been bouncing out of, like these blocks. From 1620 down to like 1609, 1606, 1612, right? Like you have liquidity. I'd bring down to here. So from like 1620 down to 1615, it's trying to show that it's a strong support area. Have we been there at all this year? Is this a year? It is. Okay. Yeah, so the last time that we were kind of dancing in that area before we had a right? Because we had sideways movement, couple lulls, dips down, lo and behold, 1470s, pump back up to 1740s, then retrace, and then dance around this 1630, 1635 area, then push down again before we actually found our first change of character. So what I'm saying is, in order for us to make this high that we made over here of 2100, we had to go lower. We went sideways, 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 pushed down, tried to push up. We did make a new high, but that high was immediately snuffed out, and then made a new low. So that's why I'm like, there's no direction here in the middle. Logically, in order for us to go higher, we have to break this momentum. We have to come down to, because look, I mean, we came all the way down to 1480, and the highest that we made was 1749. Oh, look, that's exactly what I just said too, right? Just caught that. Yeah, look at that. It's like textbook, the exact same move, right? We made it low, then the new high we made was 1749. That's the same stuff. Made a low, 1480s, high 1749, identical. Then we move sideways, just like this. Then we move down. So if this is going to play out the exact same way, then I mean, honestly, that's where this should be. That's where this delayed dump would come from. It should put us down here. Honestly, maybe even down here. Actually, no, right down here, because this is where the bullish move came from, that originated from, that gave us a high. Right over here. You know, so if you want to have a block from 1423 down to 1363, and then try to whittle that down to stronger blocks, that would be the area that I would be working, and that area would make sense in order for us to reach a new high, to reach 1873, and have any type of continuation up. But with this sideways movement that we're having, and then getting rejected hard from bears, I think that's difficult for us to make new highs. I think this was just a big ass flush out. Flush everybody that was shorting this area, or wanting to reshort, 1644. Just run those stops and then come right back down. And then all the folks that wanted to turn around and say, hey, let's long this area because it's got to flip it, right? That they got hammered harder, or just as hard. So what I'm getting at, guys, it's difficult to give calls in there and give direction and say, yeah, take this play, when it can go in either direction, to be quite honest with you. If we can get out of this downtrend, right? Let's say we push out of here, I'd wait for the retest and then probably short that. That would be my move. And then the opposite is true if, if we had like I said before, if we bust out of here, I'd wait for the retest. That's where this green dot comes into play. It could be lower, it could be a little, well, it wouldn't be higher, but it would be the next session. So maybe here, maybe here, maybe here. But that's what I would be looking to long. Sixteen 1667 could be the play, but it could also be up here, right? We just got to see. I wouldn't be taking any positions here. So if I were looking to get into a short, if this thing decides to do the same thing and pump all the way up here, and then it holds, but then you took an order at 1667 or 1670, you may have to get out of that rather quickly, because it's probably going to try to push out of here. I would look to see where like the trend is, like where the downtrend is coming at, where I'm having resistance areas, and somewhere around on this yellow trend line is what I would be looking at. You could catch a wick above to, right? So you can catch a wick. Let's say it's not in this session. Let's say it's here. We break out, and then you catch a wick there. So, you know, if you're entering short at 1686 and then it jumps up to 1705 and you have a high leverage, you'll be liquidated. And then if you have a tight stop loss and then it hits that and then fully retraces all the way back down, then you're chasing it. So what I'm getting at is I would have a DCA here. I wouldn't have a large position here. I would have a DCA somewhere around this area. Then the following candle that opens, see what that reaction looks like. The following candle opens, you know, and it has like a shaved bottom, something like this, but as an opening, and it just pushes down, then I'll market buy in and add to that short. If it comes and opens and it hits and rejects, same thing, I'll probably add to that order because I have a rejection. But if I come out and I push out of this, I'm not adding to that position yet until I see where it decides to calm down. In case they want to just have a liquidity grab for anyone that's shorted here, push out all those stop losses and then retrace right back down. So small, build small here in these areas. Don't go full port. You add in so you have a foot in the game. And then as the market starts moving, right, you go down into a lower time frame. So let's say price action is already up here in this area. I'm literally like on a 15-minute, 30-minute, 5-minute, seeing what that reaction looks like, looking for change of characters, looking for the breakdowns, looking for those candles that represent reversal points. Right, so you just got to be fast on that, and that's part of what I'm teaching you guys is what tools to use and when to use them in that moment, so you can get more snipe shots. That's really what it is. Yeah, I think so what I'm running, um, like I said, if we get a body over here, then just wait for the retest and then long that. Just don't long this area because it can just take you. I think this is liquidity. I think this is becoming the liquidity in the market to where it can make any move, whether it's down or up. It's gonna take it. And if you want to start building, like, hey, you know what? I'm on a 5-minute, or I'm on a lower time frame, and you know that's what I'm working right now. And I think I can move up higher because you know my daily is showing me something different. Then yeah, just start building in here. Small. We get a breakout of this, right? Because we have equal high, somewhat of an equal high. It's probably going to come up to here and stop. Then that would be an equal high. But if it breaks out of here and then you have a body, then wait for the retest of where the equal high was and then start DCAing a little bit more. Little by little, little by little, little by little. I see. He wants to do it. Is that a shaved bottom? No, it's got a little bit of a wick. I think this is what Ming is looking for. It's so funny. I mapped out the same thing, but I think ours look a little bit different, maybe. Or maybe I'm tripping. No, ours look the same. Never mind. I'm tripping. Ours look the same. Right. So support area. They're trying to build this for support, or at least build liquidity around it. I wouldn't say support. It can be a break of structure area. Um, I want to see an equal high here. That would be ideal. And then break down from there. That would actually be a lot. If it retraces, it would be a lot larger than that. I think I was on a 30 when I mapped this out. Yeah, that would be pretty intense. Uh, Money's coming in, strength's coming out. I don't know if that's gonna happen. ADX is decently bullish, but that's on a 30 minute. So let's go to a higher time frame. So on a 4 hour midterm time frame, money's coming in. We're over the 50, but strength wise, we're not there yet. Slight deviation. I wouldn't say it's anything that's extreme, but we were looking at the ADX earlier on a 4 hour, and we had bullish. Excuse me, we had bearish control above, and then our ADX was still flat, just like it is right now, because the ADX represents strength, right? But now we have bullish control, but no strength. So essentially, this would be what I would call bullish neutral. It could start doing this little twist game. This is where we start seeing high volatility, right? Just start twisting in between each other, then big spikes, and equally big spikes. You can see the price action, what happens, right? So it winds up real tight when we're in these areas, and then big moves happen, and it can go in either direction, right? In this particular case, ADX came down, it was sitting flat, big spike up, still sitting flat. Still sitting flat. Hold on for a second, guys. Sorry about that, guys. I had a little one come and interrupt. But getting back to DMI, when our ADX was still laying flat, we had a big spike, but it didn't have much strength. So, and look, it had essentially a shaved bottom. It went straight from 1641, like just tapped on it and just skyrocketed. But there was really no strength behind that. Same thing for the move down, but the difference is on the move down is, right, they were entwined, moved back up, but then we picked up strength on the bearish side. So that's why it feels like it's being suppressed here. So now we have something very similar to that, where the DM positive, that's the green, that's the bullish side, doesn't really have the strength that it's looking for. So it's just another reason why to sit on your hands when you're in this area. A clear direction saying, yeah, we're going to have a bullish rally. This is a lagging indicator. It's not a leading indicator. Your price action will give you that answer first. But for confirmation, you're looking at your DMI. If this has its nose pointed up, and then the red line, the ADX, is also above the 25 line, then you can turn around and say, yep, this is going to be a bullish rally. And then any move down that you see on price action, that would be by the dip move, because you have strength and you have momentum. Right now, money flows coming in, but like I said, deviations, and the strength is somewhat there. We want the RSI to be above 50. So we're getting close to that equal high. Uh, 1634.22. That's what we're looking for. A rejection there, and then move to the downside. Yeah, and so if anybody, yeah, like I said before, if you guys are just curious as to where I'm looking for longs, I'm looking for just confirmations over here, and then I'm falling onto some other indicators, uh, just for reassurance as to what moves I'm making. When I'm using these indicators, I like to use them on higher time frames, just to give me a better idea. And my success has come from using a DMI as far as this indicator on a 4 hour. So a lot of my alarms and um, alerts, if you will, for the DMI are set on the 4 hour time frame. If we're going off of a daily time frame and just kind of looking at it at a even wider picture, bears are losing strength. Well, excuse me, they're losing momentum because they can't keep the price down. Their strength is still up there. So what I'm getting at is, like, all this has to do is just turn its nose up once, and then that's a big leg down because the strength is still way, way up here on 25, the ADX. So it just needs to move its nose up once, large leg down. And if this splits, right, like if it deviates and it splits down, then it's probably going to pick up strength again. Like this ADX is going to move its nose up. So just be leery of that, right? RSI on a daily, significantly lower than the halfway point of 50. Oversold is essentially 30. Most institution finds oversold around 20, right over here. So we're hovering above 30. We're right at 36. So it's bearish neutral on a daily time frame. Bearish neutral. If you're working a daily time frame, you're looking for bearish retest. This could have been it. 1663. Because if it makes another move up to 1663, I can assure you this line is coming down further. It's not moving up. And you want to make sure that when it gets to this line, it holds this line. If it, just like the 4 hour, we were talking about the 4 hour, just using it as an example, right? If it starts crossing, you start to get these volatile moves up and down. You'll get frustrated. I don't want you guys to get frustrated with your moves, or at least doubt yourself. So big moves like this, go to your high time frame. I look at 4 hour, I look at a daily, and then I'll whittle in the middle, looking at like a 30 to see what some of these moves look like. Oh, look, double top. Oh, no, not double top. Excuse me. Equal high. So we got our equal high. Let's see if that can sustain it. Because money's still coming in. It's on a 30, of course. And we have bullish curve up, building up strength. So last thing I want to see is this be a fake move. This turns into an inverted hammer. The next candle opens and skyrockets up. In a perfect, yeah, there you go. Tap here and then push down. I mean, even on a smaller time frame, this would be more of a. It might turn into a shooting star, possibly. I right now on a 15-minute, I have a shooting star right here. right where that equal high came in. So if I was trading a lower time frame and I was looking for scalps, like those are the signs that I'm looking for. Like, all right, bet if I get somewhere in this area, I'm adding to my short, and then I'm looking for an exit somewhere around here. And if this does play out, then I'm looking for an exit somewhere around here. Is that a new high? Let's double check. What's the high on this? 1634.22, and the high on that 1634.09. So failure to make a new high, even if it's off by a couple pennies. All right. Yeah, sure. Data window. Here they are. I use a triple EMA. I have those indicators, like all the settings inside Discord. If you just go into the classes, the class forms, you'll see indicators. And you'll see like an explanation of them, see a couple of charts. If it's not in there, or if you still have questions, just ask me. But I use a triple EMA. There's a regular 200 EMA, a 100 EMA, an 8-day EMA. This is a Lux Algo indicator. It's called Superichi. It has to do with Ichimoku cloud strategies, except I'm not using the cloud. I'm more of using a Tenkan and Kijun Sen lines to show me areas of support and areas of resistance. Typically, when I have a cross down on these two indicators, like this is the Tenkan and this is the Kijun. The red is the Kijun that's bearish. Tycoon is bearish. If I have a crossover, this yellow dot is my confirmation that this needs to be a sell move. I'm on a 15-minute, so that can vary, right? Like you can see moves like this, like, hey, it's time to buy. Oh shit, it's time to sell, right? So it can be dangerous on lower time frames, but like I was mentioned before, using something like a 4-hour, it kind of gives a little bit more clear direction. Right now, Tenkan is acting as resistance, but if someone were just to base their whole strategy just on a Tenkan and they took this as a resistance today and they shorted here, then they got stopped out, if not liquidated, because it went all the way past it. So it just goes in conjunction with whatever your setup is looking at. I like to use it for that reason, just to get more additional confirmation. Like, should I be selling? Is this a true pump? Because if this was a true pump and we continue to rally, then the Tenkan would have curved up. Take the price action off for a second. This would have curved up. It's remained flat. If not, it's continuously broken down, went flat, broken down, curved down, went flat. Even the slightest little curvature would have let us know, okay, we're probably preparing to make a move. So buy the dip momentum is probably right around here, but it's still flat and brought it right back into the range. So like no confirmation. These indicators over here are the MFI and RSI. Right, there's a RSI with a peak overlay. That's this RSI where you see a red line. So the red line will start to indicate, letting you know when it's running hot, that it's overbought. And then obviously you have your strength, which is just a regular color. If it's oversold, then it has like this aqua looking line. And then MFI, money flow indicator, that's what that green line is. DMI, I literally just went over all that. And then you have a CCI, which is right down here. It's just another indicator to measure momentum and volatility. Not strength, but again, momentum and volatility. And then I have a 8-day EMA tied to it, just because it gives me a little bit more easier way to track what that move looks like. Because if it's crossing over my 8-day EMA, which is a shorter EMA, to give me a little bit more of a faster read versus a longer EMA like a 50 or 100 or 200. I'm using a shorter day EMA to give me more faster data. So if I'm crossing over that EMA, then I know that that move has more strength than what maybe my price action is showing me. So if I'm questioning my price action and I'm like, should I be shorting here? Is this the area that I need to be shorting? Or not even shorting, is this the area that I need to be exiting, right? Let's say maybe you have a long and you're hitting certain areas and you're in profits right now, but you're like, should I be holding or should I be closing it? That's going to give you another indicator as far as what that momentum looks like. So I will screenshot this. I'll put it inside Discord for everybody so they just know what indicators I'm using. And if you guys need help with them or setting them up or have questions about breakdowns on them, just let me know. In short, does that help though? Like, let you know what I'm using? All right, let's come back here to a 30-minute real quick. See how that's developing. And this may be overkill for me to say at this point. Another reason why we're not trading this area is because, I mean, look at the shaved top here and the shaved bottom right there. That's not fun, right? If you're entering shorts here, then like I said, just be on the sticks, but nobody should be complaining like, oh shit, I got stopped. It's like, you should be like happy you got stopped and didn't get liquidated because of moves like these. What's Dixie doing before we sign off here? Right, so Dixie can make a move all the way down to here, right? It can make, right, let's say that pattern fails and it decides to make a move all the way down to like right here. It's still bullish. It's not a new low. Right? You might get a change of character right here. Right? So if it comes down to here, still bullish 104.6. If it comes down to 104.5, I know we're splitting hairs, but that's the differentiator. Then we get a change of character, and then I wait for the retest somewhere over here, and then it should make its next move over here to fill this gap, right? Because you have you have quite a few gaps, to be honest with you. Right, that's a small little fill. This looks like it would be bait. And then the next move, which if you can see this trend line, it's to fill this area. Fill this area, fill this area. This might be where they find support because this was pretty strong. Move up, rejection, but equal lows, shaved bottoms, you name it. And then it never even came back and touched it. It literally went into this pool and just kept going, kept going. So this would be the area of interest that I would be looking at for Dixie to break through, to have a nice, healthy, juicy pump in crypto. I want to see Dixie have violent thrusts down. For lack of better terminology, it can't, like pussyfoot around here in this area because we're not going to see anything on ETH. It's going to have more sideways movement. We need some violence, hard pushes. But I think if it just continues to move sideways, investors are going to remain bullish on this, and they're going to try to push into this OB over here, and we should get our dump on in the crypto market because this is a massively delayed dump. Huge dump delay. What did I say that start? When did that start? We made a low. Shit, is that our new low? From no, that wouldn't be a low. It would be this. Nope, because we made another new low in that internal structure. So technically, it's like the same body. Yep, and it's the same thing. 1639. Right? Because if I'm just focusing on these swings because I made a new low, just from a swing perspective, and I made a new high based on this structure. So like this is the area that I'm focusing at. It puts us right back at 1639 as the halfway benchmark. We would need to see bodies above here for this move, right? This move up to be a valid reason or a valid move that we're actually moving up to the upside. If we can't claim this and we just keep rejecting here, then it's going to continue to be bearish. That idea has been since, as you can see inside my corner, I mentioned this on the there. If you just look back on what day was it? 28th. Yep. The third Power Ranger down. A body beneath 1638, we go bearish. A breakout and close above 1660, our structure flips, which we saw that in a brief moment of time, but then we've obviously come back down. 1641 was bullish if we had that move up, but we're right back to that similar range at from 828 through 831. Bodies beneath 1638, this is going to remain bearish. Bodies above it, getting some bullish momentum. Bodies above 1663, it's from a higher range, a higher structure. It's even more bullish. Doesn't put us out of the woods because we just have these downtrends in these areas that we need to break through, which are also going to be known as your sell walls. And we have some imbalance that we can fill here. So wick, come down, and just do this whole momentum game here. Do you guys have any questions? Anything I can cover for you guys? I'll take a peek at BTC in the meantime. Let you guys load them up. Are you guys enjoying these streams? Are they easy to follow along and navigate? Like, are there any lags or any sticking points? Any fuzzies? Any recommendations? I want to make sure this is rock solid for us. Wait, what did that idea say? I love reading other people's ideas. For a different pair. Okay. I read that wrong. Similar to ETH, we're just kind of, we have liquidity grabs down to here, a couple liquidity grabs up here, but this just feels like bait. I don't know why it does, but it just does. It just, I would like to see, strong candles above, but people are putting in their orders here. We're making higher lows, we are, but we're not making higher highs either. We're actually making lower highs. So we're when you see that I'm not making a higher high and I'm not making a lower low, then you're kind of stuck in this indecision area. That like screams range. Right? So that's when you see range, try to sit on your hands. I started the challenge this week, I think on Tuesday. What is it, Wednesday? So to us traders, 48 hours feels like 2 weeks. But what I'm saying is, like, I haven't given a call for that reason, just because there's nothing of substance here, and you'd have more upset people just not understanding why they're losing. But to understand why we're not taking is because we are protecting capital by not taking that position. If you took a long over here, that's fine. There's nothing wrong with the bottoms. There's not much wrong with the tops. I would consider these the tops, not these, because these can be taken. But like areas of here, if you longed this area, nothing wrong with that. But just not in the middle. Not in the middle. But not much. What is this texting doing here? Not much has changed from what we discussed yesterday in regards to like BTC. Like the idea is either this is going to turn into a flag, or we're going to have a breakdown and we start filling this imbalance over here in this area, and we start making our way down to lower 20s, upper 19,000s. I had an area here because remember, this was the change of character on the daily. So retesting that area would make sense to me because this whole area is unmitigated. It's unchallenged. Down here it is, right? Because you see that volatility. You see all these little tiny candlesticks, but then you move into the next day because remember, this is daily, one day, unchallenged. Unchallenged. So to come over here and challenge this area to confirm that it's support, that's what makes sense to me down the road, long term. Would I long this in the meantime? Absolutely. That's a good amount of ROI if it works out that way, right? Like if it comes up to here, maybe it gets rejected, that's okay. this is a this is a healthy move, even if it does reject here. So there's nothing wrong with long in the bottom over here. I don't want you guys to doubt yourself or think you need to be sidelined, that you shouldn't be taking that. If you need someone to kind of echo to you, take it. Then obviously if it breaks out, then it goes much, much, much higher. But the moment it starts breaking down out of this, like if it reached down to 25 to 14.55, like 2 cents lower than this, I would be hesitant on adding to longs because then that looks like it's a breakdown. Because all it's going to take is one swift move, because this is liquidity, just to come and fill all this gap. Big giant violent move. As fast as we were able to move up here in 1 day, 2 day, small little pause, 3 day, 4 day, is within a week. Yeah, 5 days, a work week. They can do the same thing. They can move. How much was that in 5 days? I'm using the wrong tool, am I? Oh, I didn't even highlight. We came up to here. Right there. So I obviously have it upside down, but it's the same measurement. Yeah. I wasn't even trying to line that up to fill up the gap. It's just where I'm getting at. Like that's a significant move, and that can happen in a matter of a week. And if you're trying to chase along, you're gonna have a frustrating 5 days in a row versus saying, hey, you know what? It's not gonna go up. It's not gonna go in the direction I want. I'm probably better off just taking a short and then just relaxing. Because that can be a violent move and you're going to get frustrated. You're going to try to long this, you're going to try to long that, you're going to see a 618, you're going to try to long that. And then by the time you get here, you're going to like, you know what, screw it, I'm not longing anymore. I'm just going to sit on the sideline. It's going to tap here and then it's going to go up. That's what's going to happen. So it's best just to take it easy and then wait to see what price action takes over here. Be modest with your long entries over here. Don't be an animal. Don't ape in. If we get confirmations and we start catching bodies above over here, then that's a different story, right? We bust over this 28,306 area, then yeah, I would say this is a safer long for you to enter into. Maybe you want to enter in a little bit heavier because we have confirmation that we're reclaiming this area, which also kind of lines up with wave B, just as an FYI, for an anti-butterfly that we have for BTC. But we're not there yet. We would have to build here. But if you're looking for safer entries and you don't have the stomach for this, or you just don't have the time, whatever it is, look for these areas down the road. I'm reading your question, Ryan. Hold on. The butterfly in the 30-minute is a big candle. Are you referring to BTC? I mean, ETH? Let me go back to ETH. You talking about this anti-butterfly? This one right here? If that's one you're referring to in this big giant candle, this is a bullish move. So technically the pattern played out, but we didn't make a new high. We didn't have a break of structure. So this isn't technically a swing. If you're using like a 5-minute or 15-minute and maybe you want to get some scalp action inside there and you're using this as a swing point, yes, then use it as so. But technically this would still be valid because we could retrace all the way back down to here and then jump up again. This pattern would still be valid because I would have to get another swing point lower than here to use this as a swing point for internal. But if I just come down to here and I don't make a new swing point, then it's just a retest. It wouldn't be a correction, if you will. It'd just be a retest. Does that answer your question? All right, perfect. Okay, good. Yeah, but see now we're running into equal highs again. Yes, I think I've tweaked. I'm gonna move this over so I can see price action at the same time. But there you go. If you want to see what they look like, if you want to screenshot that. Got it? And then style, I mean, that's obviously colors. It's the crossover section. Just change your little indicators to dots and just make your crossover and cross under, make them the same color because you're waiting for your crossovers to confirm if that's a bearish or bullish move. Changing the color won't matter, meaning like I wouldn't change like, oh, if it's a bearish move, let me make it match that. That could mess you up. So that's why I just changed it to a yellow. I had it white before, but the white would have blended in with my candle, so this is why I made it yellow. It stands out more. I take all the other stuff that has on it. I just take it off. Right. Like it comes with the cloud and all that jazz. I don't use their cloud. I don't use any of that stuff. This is just the data I want. So on a 30-minute, I'm actually glad I pulled that up. See, like on a 30-minute, this thrust up made it. Hold on, because you can't see it because the price action at the same time. Hold on. Right, that thrust move up made them cross over. Excuse me. And technically, we should be bullish if you're basing your strategy on that. If you're basing your strategy on like, hey, we're going to continue to move up because my Tenkan is cross over my Kijun, and you know it's going to be bullish. Here's the problem with that is that your Tenkan is flat, and so is your Kijun. Like you would want to see this curved up to say, okay, yeah, we're going to keep going. You know, and you just go up in higher time frames, right? Because lower time frames, you can get this. This can throw you off. Like I have no price action up, but if you're saying, okay, it's time to short, You short it right here. Look, pop right. Is that a little dot? Get rid of that. This thing's irritating. Then it popped right back up. Oh shoot! It's time to buy, and it can come right back down and do it. So it's important to just use the higher time frames. 90-minute has this bullish, and then you jump into a 330. I'll go down to like a 2-hour, which is close to a 90. Just flip bullish. This is a good example of, so like 3 hours. So going down in time frame like 15, 30, 45, 59, 90, and 1 hour, 1 hour, 2 hour, 2 hour. So up to a 2 hour, we are bullish. 3 hour going up, we're still bearish. If you're working multiple time frames, and this is, maybe I'll break this down in a class, like how to find swings or when's the right opportunity to look for swings when you're using smart money concepts. If you have a lower time frame that's turning bullish, but your higher time frames are bearish, remember your higher time frames contain stronger data. So your lower time frames showing you that they're bullish would only represent, or could only represent, a bearish pullback. It's not going to make a new high, but it's going to get damn near close, and then it's going to retrace right back down. So as you're working through your time frames, like for example on a 3 hour, if I'm basing it on Ichimoku and a strategy, I have a curve up. It was flat. That move up brought it up, and then I came flat again. This hasn't moved since the move down. This is just remaining closer. So we may, I'm using my hands like you guys can see me, but we may have more compression in price action before we have legs in either direction. If my higher time frames are bearish, that compression can lead up to a strong leg down. And if we're of the mindset, in order for us to go higher, we must go lower. If we're looking back at the, what was it, the March or January timeframes, when we hit those lows before we rose back up to 1749, and then we came all the way back down to the lower 1300 handles, right? That's where this compression can be happening right in between here. Put your price action on. See, just, it could be giving some compression. Sometimes a good tool to use for that would be a Bollinger Band. There's a Bollinger Band width, and then there's just regular Bollinger Bands. Oh my gosh, I got to get rid of an indicator in order to show that. All right, I don't want to do that now, but I'll find a way to get a Bollinger Band on here so I can give you guys an example of that. I guess I have too many indicators up for their pro version. I just stepped down from premium just because I figured it'd be easier, but I think I'm going to have to go back to premium. Just the tools that I use. It's more of an ease of accessibility and quick looks versus I got to close stuff just to use another tool. Anyways, I'll digress. Just take a peek, seeing, yeah. So Dixie's just kind of like falling flat right here. Right? Like if the momentum carrying it down was strong enough, and that's just on a 2 hour. You got some divergence, which can mean literally squat, because we had divergence over here. Excuse me, divergence over here. But all we did is have a pullback. We had a pullback to an oversold area, and that oversold launched us to a new high for midterm year, not for the year, but midterm year. And now we're doing something very similar. And that RSI is now curving up again. DMI is smoking hot. It looks like it's reaching its apex. It's right, like think of like a sunrise, right? It goes up, it reaches a peak, and then it starts to cascade down, right? We need to figure out if this is starting to cascade down, but that don't look like that. Right, so it may give us another leg. It can still come in this direction. A curve would actually help in this situation. Right, even if it's a little bit of a peak, that's still more strength. And the fact that it's curved up as well here just lets us know that it's trying to pick up more momentum. Dixie Bears are just like, we're gonna sit out. That's what this is showing. They're just like, yeah, we're not even trying. They're not. And you can see it in the price action, like they're not even trying. I'm telling you, when they do decide to eat, it's going to be vicious, and I can't wait, because that should give us a really, really good pump on our side. But I want to see this dump first. Like, it would just make sense. It would validate a lot of what we're doing as far as some of the moves that we're taking, or at least preparing for in the sense of dumps. Um, I'm gonna start wrapping things up on my side. Um, I gotta get some grub inside me, but if there's anything I can answer for you guys, I'll stay on as long as I can and answer it. Take me 15-20 minutes. That's fine. But please ask away. Not, I'm going to hop off and get some food. All the talking makes me hungry. One thing while you guys are maybe putting some questions together or thinking of stuff is, it's one thing to listen to what I'm saying and seeing what I'm doing. It's another to put it into action and put it into play. One tool that I recommend you use, and this is for back testing, is just, use one indicator, use two indicators. This is how you kind of test out your theory, and use this replay button and go back as far as you can, or as far as you feel comfortable. You obviously know what happened, but you can see how it breaks down. And then let's say you're putting this indicator up, and where's the play button? There you are. I'm like, all right, cool. They crossed. See? See how they cross? And then the Tenkan reaches down, then acts as a point of resistance. Why the Kijun just lies flat. Meaning it's asserting its dominance right here, saying, hey, we're taking control. I'm on a lower time frame. I'm on a 30-minute. So just letting you know that, like we said before, it's a risky time frame to use, but nevertheless, you can still use it. The Tenkan is just kind of hanging out here. Excuse me, coming down, and the Kijun is holding solid. Price action tapped on it. Let's see what happens next. Acted as resistance, then we get this huge spike up. Let's take this off for a second. That's what you want to see when you have a crossover. So I would have to end the replay, but if you go and look on your chart and you're using the Superichi indicator, and you look at today's spike, these didn't do that. They didn't move. Even on this time frame, they didn't move. So it lets me know, like, this is not a valid move, if you will. But if you're back testing, or when you're back testing, these are notes that you keep in your mind, saying, okay, well, when I have big spikes, these should move up with it, right? So let's put price action back on. What happens next? Oh, shit. There you go. Now we're getting deviation, right? spike up, spike up. Now this is wanting to run flat, and then this is still spiking up. When I see this, I know I'm getting into an overbought situation because I'm now getting deviation. No new high, hard push down, flat top. Tenkan is flattening out. Kijun is also flattening out. Could be compression in this area. Bouncing off. No crossover yet, right? A cross down, but no crossover yet. This is when you should be entering into a sell, right? Crossover. When you get a crossover. Taking up strength, this is moving down with it. Equally as this moved up and the Tenkan and Kaiju moved up with it, the same thing can happen if you have violent moves down. Right? Because remember, you entered into a sell when you saw this. On these little piggies over here, came over here, maybe you entered here, right? Or maybe you wanted to enter here in this area, but this was your signal saying, I need to be selling, I shouldn't be buying. I'm looking for now. I'm looking at exits. I need to start looking at exits because now I have a rise up. This is still flat, but this is now picking up momentum because you have a sharp move up. Do I exit here? That was your exit cue if you didn't get pushed out. But remember, if you short it from over here, and then let's say you didn't take any profits down here or down here or down here, you know, you weren't looking at candles, you weren't taking any of that, and you're only basing it on this, that candle would have took you out, you still would have been in profit. And technically, if you should be closing when you see this crossovers like that. So your play was from right. Let's say you closed on that 0.43%. I don't know what your margin would be. I don't know how much that would be in profit for an individual. It's an $8, 8 pip move, right? Why someone didn't take profits there, I don't know why. But even so, even if you set your stop loss to somewhere in this area, you would have been in profits. Shitty profits, call it what it is. Like, anyways, I'll digress. If you have a high margin and you have a high leverage, you know, 8 pips, you know, on a $10,000 move can yield like $1,200, $1,500. Like that would be your scalp, but that's decent, right? So if you're doing it on like a $50 trade and it's 8 pips and it's a high leverage and maybe it's like $30, $20, right? It's the ROI percentage. I wouldn't necessarily think the dollar amount. If you're focused on a dollar amount, you need a higher margin. But going back to back testing, right? So you had a crossover, but look, this was a fake out. So you closed, which wasn't bad because you made a new high here. So if you held on to this and it kept going up and then got nervous and you're just not accustomed to this and you didn't have this trend line, you weren't focusing on any of that stuff, then you went negative, you went red, only for it to come all the way back down. So what I want you to focus on, or at least notice when you're using these indicators and you're back testing, is saying, what happens when I cross over? Should I be entering into a long? Textbook says yes. What's the next candle doing to give me confirmation? Oh shit, it's moving up. Oh shit, it's moving down. This candle was a sell candle. So if you had your stop loss set somewhere over here, again, you moved in profits, but these are weak hands. That's paper hands. You wait for the next candle to find out where you're going to be at. You need to know where you originated from. This trend line would have saved your life. It would have saved your trade. This would have been an opportunity for you to add back in, because what are wicks? Liquidity grabs. This is a strong area to short from, but where did price action do? It pushed above it and then came right back down. Liquidity grab, institutional money. It's hard to compete against that. So you have to design your map as best as possible to know what are areas of interest that they would want to get into. And you can see the footprint that they leave behind. They leave areas of imbalance. That's where they've left their mark. That's why you track order blocks. That's why you track liquidity pools. That's why you understand where these wicks come from, because you know where they're leaving their mark. If they decide to get back in, that's an entry point for them. It's an easy map for them. Move forward. Price came down, teased, then just murdered everyone. Murdered, Jesus. Murder, she wrote. So going back to that, this person that got stopped out over here is chasing this. And look how fast this was, guys. It pushed down and came back up. This person probably longed it. It got into here and then continued to push. When you see big candles like that, institutional money. Institutional money is here. Just like institutional money was right here. Look at the shaved bottom. You have to have a lot of money, or at least access to a lot of money on a big position to move the needle like that. So they wanted to literally own this whole block. 1646 to 1748. Literally a full 1,000 they wanted to own. So people that got in on these positions made a lot of money that day. And you can, those are the signs you start to see. See these weird looking, like equal highs, if you will, going up in an upward pattern. What does that look like to you up front? Like if you go back and replay it, that looks like a flag formation. And it would make sense. You'd like, look at the big rise on that, small dip, small pullback, and another high that it set. Yeah, it should be cooling off, and the next move should be a flag, because this is a flag formation. That's what they want you to think, because it's that obvious. And then they just dumped literally on everyone's head. Fast forward. The massacre continues. Continues. Let me stop here for a second. Look, waterfall, 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 waterfall. We get to this area right here. What do you see? You see a shaved bottom. You do have a shaved bottom over here, and the next candle that moved up was a confirmation. Was a bullish candle that moved up. But if we're running into the Tenkan, it's flat. It didn't move up. It stayed flat. And it just rode it, just like it rode it all through these other areas. So is that an area of resistance? Yeah. Here's what's different. Look at the separation from your Tenkan to your price action in the shaved bottom that it's making here. Next candle, still nowhere near it. Then you have your thrust. Bullish candle, bullish candle, bullish candle. Now people are entering. Let's say you shorted from way over here, you added back into here. Don't be greedy. You got a confirmation. You don't have a strong move like this, a flat candle that moved out to make it cross over. You don't have that. You have genuine candles right here, because you have a wick. It didn't make a lower low, a push out, a hold, and then a push up. Market manipulation stepped in over here, not here, here. And they're already broken out. So they said to you, we're going higher. Bears are now going to start stepping in. I'm sleeping, I'm sleeping, I'm sleeping, I'm sleeping. I'm accumulating, I'm accumulating, I'm accumulating. It's a race over here. Ah, look at that. It so happens to be at that 1639 threshold. But you can see where this jumps in. Bears literally jumped in and said, okay, I'm awake. They're not going to let the price get away too fast, too easily. So when I see these start to line up, there's going to be compression going on. That compression can go up and that compression can go down. Losing strength, losing strength. Oh, don't do that button. Don't do that button. Don't do that button. Thank you. It's getting tighter. That compression's getting tighter and tighter and tighter. This is when you start looking at other indicators, other momentum, RSI, money flow to identify, is money coming in or is money going out? Is there deviation between strength and money coming in and going out? That's when you have to start leaning on other aspects, other tools to figure out, are these moves real? What's going to come next? Son of a gun, don't do that. Yeah, I just took everybody there. From that crossover to here, all through here, they just took everybody to lunch. Right. So when I'm back testing and I'm looking at something like this, I'm going, well, when I have deviation like this, I have strong moves. It can be in either direction. But when I have tightness between the Tenkan and the Kijun, when they're tight together like that, it's price action is coiling around it like a snake. And the moves that I see, they're not real moves. Oh shit, let's start to short because I have a crossover and it's going to start dumping. Next candle open, shave bottom, move up. Stopped everybody out that they decided to long over here. I mean, short over here. Right? Separation, right? But when I see separation here, this is tricky because it is making a newer high. But if you're only comparing it to this high, that's where you're wrong. That's where you're making your mistake. Like, none of this shit is a swing. Like, your swing is here and your swing is here. So everything in between here is just internal. It's not even part of an external. And even these are part of internal, even on a larger time frame. So this is where some folks get messed up. They're like, well, my stop loss is going to be here. And then it runs your stop and it comes up to something like this and then it pushes all the way back down. And then they get frustrated and they're like, well, why? Two reasons: over leverage, so you're going to get stopped and get liquidated. Or two, you just don't have a concept of where you're coming from in the sense of structure. But that's okay. That's why we're doing backtesting. That's not a dig on anybody, just in case my tone wasn't received correctly. Tightness, crossover again. And we've been in this range for a couple days. Dip. I think the big spike's coming now. Dip. Separation. See how tight they are coiled? Because look, we finally made a like an equal high, if you will, because Tenkan decided to come over here in this area, right? But we haven't left this range, right? So this tightness is still kind of where we're at. Small little dip, that's it. Little deviation. But if this was a real genuine spike, we'd have crossovers. And what I mean is, yes, we do have a crossover, but this would still be going. It's compressed. It's compressed. It's, so a leg down will move this, start to curve it. And then if it moves down even further, then that's when we're going to get our leg and we'll move down into this direction. Like if this is valid, that's what they did. A liquidity grab to come over here, create this pennant, break down from here, which that's what this could be going on right now. breakdown from here, the same measure move would put us over here. That's a continuation, not a reversal. So that would put us in the 1586 ballpark area. I would anticipate everybody is going to be longing that area. We come back up and we retest where we broke out from, and then we continue back down lower. That's how that would work. And by lower is, I mean, look at this huge candle we have to fill. When price action comes down like this, remember, it's a footprint. It's literally telling us, I'll be back. Same thing with tops and bottoms. It's showing us where price action can get to, and when you have these long giant wicks like this, it's going to get filled to the right. Price action will come down and visit these areas. It can be in wicks, it can be in bodies. Just remember that. So when you see that, you can't take this off the table. Oh, no, this was the bottom. We're never going to come and see that again. Bullshit. Anyways, does that help you guys? Like breaking down like Superichi, how to backtest something, how to like apply that towards your strategy, because you can do that literally to anything. You can pull up something like a fib, and you just want to start practicing with fibs and different tools. I'm like, I like how this works. I understand it more. Just pull up that indicator and backtest it. Just run it through. We did get an exit signal for one day at 1662, but I think that was fake. I don't think that's still valid. I think this needs to be like it needs to be violated. If it comes down and kind of dances on here again, it's no fun. It's not going to be a fun market to be in, just because I think we'll just have more sideways action, and then we'll see the moves and then find ourselves wanting to chase it. Just I would set your limit orders to 1663. Some of you guys are getting front ran in that sense. Maybe set up a couple DCAs in that area with your stop losses tight on them, so therefore your average doesn't get obliterated. But just like I said, on the downside, that long wick would get filled. Look what we just got today. We got a long wick. So, this lets us know the potential of where bulls can reach with ease, with no problem. Blink of an eye, they can reach here. So it's an area that we'd have to come and fill between here and here is going to be the hardest area to break. So we would need to see large thrusts, big candles, fat candles right through this to say, okay, we're about to go parabolic. I don't know if we have that, guys. That's what I saw. This fun lover needs to die. I'm like 10 minutes behind in the stream. Oh yeah, cool. All right. I didn't see any questions come in, but I want to give you guys that little piece. I'm gonna go and grab something to eat. I'm starved. Been talking for like literally, what is this? 2 hours. Need to get some grub, get some water. But I'll be back in the chat. I'll be checking the charts. If you guys have anything for me or any questions, you guys know how to reach me, and I'm happy to answer. So I'll holler at you guys soon. Peace.